Hi, Jonathan York, Bay Financial Partners, looking at investment markets. The CPI data for February came in pretty much in line, plus 0.4 for the month and 3.2 year on year. Now that's certainly encouraging after the blip we saw in January, and there was some worries that maybe inflation was sort of starting to take hold again, but inflation clearly appears to be on a downward path in the US. Now that's on the back of reasonably strong jobs data again, came in at 275,000 versus expected around 200,000. But what was interesting was the revisions to the previous months. That took out around 160,000 jobs. So again, although jobs are being created, the job market and labour market is not quite as tight as it was sort of 6 to 9 months ago. And interestingly, the unemployment rate did actually nudge up slightly. So all that sort of points to a reasonably robust economy in the US. But as I said, inflationary pressures are coming down, and potentially, still looking at a Fed rate cut sort of the second half of the year. Though, of course, that is data dependent. Now, rates still hovering around sort of recent levels, 10 years around 415 and the 2 years around 459. So not really too much change in those rates. Now, on the political front, Donald Trump has fronted up with a bond for his defamation case around 80 odd million bucks. Although he is obviously contesting that and appealing that decision. But then what did seem quite strange is that he came out and made the same accusations in a speech sort of 2 days afterwards. And what is becoming quite clear in the US is that nearly half the population don't really want to vote for Trump or Biden. But it looks like they'll be given little choice. So the US markets recovered a little bit of lost ground. Late Friday, there was a little bit of profit taking in Nvidia, which, if you look at it, what it's done over the last sort of a year or so, it's up over 200%. So for it to fall sort of 5% in one day, although it was a pretty big fall, in the biggest picture, it's not really too severe. Oil back around 77.50 and change. Now, in the UK, it's going to be pretty interesting because you've got a very sluggish economy out there, with inflation expected to fall now from its current level of 4% down to around sort of 2% over the next sort of 3 to 4 months. Now, if that is the case and you've got, say, sort of falling inflation, when will the Bank of England start to cut interest rates to stimulate the economy? Because at present, it certainly needs it. Likewise, in the Euro region as well, you've got sluggish GDP, and, when will the ECB start to cut rates to stimulate that economy? What is interesting in Europe as well, the Portuguese elections currently, the far right are gaining quite a bit of support out there. Now in Australia, the rate hikes are starting to have an impact on the economy there. Again, sort of sluggish, softish GDP. And again, when will the Reserve Bank look at starting to cut interest rates? Because clearly you've got inflation under control on the recent data. It is on a downward path, and the economy needs a little bit of a stimulus, a little bit of a push out there. Now here in New Zealand, the Reserve Bank's still talking tough on rates, saying they will remain higher for longer. But what is interesting is a couple of big high street banks have cut their mortgage rates in the last week. And one of them, it's the second cut in the space of 3 weeks. Now, is that just trying to gain a little bit of market share in the mortgage market, or is it a clear indication that they see the sort of peak in rates and the next move is obviously going to be down and will be sooner rather than later? We might get a clearer picture after the data next week when we get the GDP data, which is expected to be flat, potentially maybe even negative. And if you look at that, that will then be flat GDP for the last 12 months. So clearly the rate hikes are having the impact, and it's just a question of when the Reserve Bank starts to look at it and say, okay, the economy needs a little bit of a help now, a little bit of a push, and we'll look to cut interest rates. Interesting, a couple of bond offers in the marketplace out there trying to mop up a little bit of spare cash as well. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.